Artificial intelligence. It's no longer science fiction. It's no longer just a buzzword. It's here, it's real, and it's changing everything. And one of the biggest places where AI is making waves is the stock market. The truth is, AI is no longer just powering chatbots or self-driving cars. It is powering billion-dollar trading systems, influencing investment decisions, and driving massive growth in global markets. If you have been watching stock prices lately, especially tech companies, you have probably noticed a surge. That surge is not random. It is being fueled by AI. But how exactly is AI driving stock market growth? Why are investors pouring billions into AI-related companies? And most importantly, what does it mean for you, the everyday investor who wants to ride this wave without drowning in risk? Let's break it down. First, let's talk about how AI is being used inside the markets themselves. For decades, trading was about human intuition. A trader sat in front of screens, looked at charts, and made a decision. But today, that trader has been replaced or at least enhanced by algorithms. AI-driven trading systems can scan millions of data points in milliseconds. They analyze patterns, predict movements, and place trades faster than any human ever could. This has given rise to high-frequency trading, algorithmic strategies, and robo-advisors that can manage entire portfolios automatically. Hedge funds and investment banks are spending billions developing these AI tools. Why? Because accuracy and speed equal money. An AI system that can predict market trends even 1% better than competitors is worth billions. And these systems are already shaping the stock market every single day. But that's just one side of the story. The other side is the companies building the AI revolution. Think about it. Every time AI becomes more advanced, demand for the companies powering it explodes. Look at NVIDIA, whose chips are fueling AI data centers. Their stock has skyrocketed because every AI model from ChatGPT to medical research software runs on their processors. Microsoft, Google, Amazon, all are racing to dominate the AI space. And the market rewards them with higher valuations, driving growth in the tech sector and lifting indexes like the S&P 500 and NASDAQ. In fact, analysts estimate that AI could add trillions of dollars to the global economy over the next decade. That kind of growth translates directly into stock market gains. Investors aren't just buying shares in companies, they're buying into the future of how businesses operate. Let's take a step back. Why is AI so powerful? Because it makes businesses more efficient. AI cuts costs, automates tasks, and creates new products and services. In finance, it predicts fraud. In healthcare, it diagnoses diseases. In manufacturing, it optimizes production. In retail, it personalizes shopping. And in every single case, that efficiency boosts profits. Higher profits mean higher stock prices. And that's why AI is a driving force behind market growth in 2025. Now, here is where it gets interesting. It's not just the big tech companies that are benefiting. AI is spreading across every industry. Banks use AI to assess credit risk. Car companies use AI to design and test autonomous vehicles. Energy companies use AI to forecast demand and improve efficiency. Even agriculture is using AI to boost crop yields. This means the AI boom is not just about one sector. It is about the entire market. And when an entire market becomes more profitable, the stock market as a whole grows. But with opportunity comes hype. Let's be honest. Every time a new technology comes along, like the internet in the 1990s or crypto in the 2010s, investors get overly excited. They pour money into anything with the right buzzword. And sometimes bubbles form. The same risk exists with AI. Not every company that calls itself AI-powered is going to succeed. Some will rise, some will fail. And as an investor, it is critical to separate hype from reality. So how do you identify the real winners? First, look for companies with proven AI applications, not just marketing. NVIDIA isn't just talking about AI, they're literally building the hardware that makes it possible. Microsoft isn't just saying they believe in artificial intelligence, they've integrated it into Office, Azure, and Bing. These are real revenue-generating applications. That's different from a small startup throwing AI into their pitch deck to attract attention. Second, look for companies that benefit indirectly from AI adoption. For example, cloud computing providers, cybersecurity firms, and data storage companies all see growth as artificial intelligence expands. They may not be building the AI models, but they are selling the tools needed to run them. Sometimes, these indirect plays are even more profitable than the obvious big names. Third, diversify. AI is powerful, but it is also risky. No one knows which companies will dominate long-term. That's why many investors prefer ETFs, exchange-traded funds, that focus on AI and technology. These funds spread risk across dozens of companies, letting you benefit from the trend without betting everything on one stock. Another big way AI is driving growth is through market sentiment. Investors are excited about AI. They believe it is the future, and belief itself moves markets. When people expect companies to grow, they buy stocks. That buying pressure pushes prices higher, creating momentum. And momentum drives more investors to join in, creating a feedback loop of growth. This is exactly what we've seen in 2023, 2024, and now 2025. Tech stocks have soared largely because of AI optimism. Even if the profits aren't fully here yet, the market is pricing in the expectation of future growth. That's why AI is not just a technological revolution, it's a psychological one. But here's the part most people overlook. AI doesn't just drive growth in stocks. It also drives growth in investing itself. Platforms like robo-advisors, AI-powered stock screeners, and automated portfolio managers are helping retail investors, people like you and me, invest smarter. These tools analyze data, recommend strategies, and even execute trades. That means more people can invest with confidence, leading to more money flowing into the markets. More money in the markets equals more growth. And AI keeps improving. Every year, it gets faster, smarter, and more efficient. That means the companies using it also get better, stronger, and more profitable. It's a cycle of innovation feeding growth, and growth fueling more innovation. Of course, no conversation about AI and the stock market would be complete without addressing risk. AI could cause disruptions. Automation might replace jobs, leading to social and political backlash. Regulators may step in, limiting how companies use AI. And of course, if companies overpromise and underdeliver, stock prices could fall sharply. That's why long-term investors must stay cautious. AI is powerful, but it is not magic. It will create winners and losers just like every other technology before it. The bottom line is this. AI is driving stock market growth because it is transforming the way businesses operate, the way investors trade, and the way markets function. It is boosting profits, fueling innovation, and attracting investment. And while there will be bumps along the way, the overall trend is clear. Artificial intelligence is not just the future of technology, it is the future of the stock market. So, the big question is, how will you position yourself? Will you sit on the sidelines and watch the AI wave pass you by? Or will you study these opportunities, invest wisely, and ride the growth into the future? Because whether you are ready or not, AI is here. It's reshaping industries. It's reshaping investing. And it's reshaping wealth itself. The only question left is, are you ready to take advantage of it? If you found this breakdown helpful, hit that like button. Subscribe for more insights into investing, technology, and wealth building. And drop a comment below. What do you think? Is AI truly the biggest driver of stock market growth in 2025? Or is it just another bubble waiting to burst?